Hey friends, hey friends, hey friends, hey friends. Okay. Hey friends. Now, a couple of weeks ago, I asked a question on my Instagram, and the question was this: what personal finance topic keeps you up at night? Now, some friends were kind enough to participate in terms of answering that question, and most of those who participated asked or expressed questions in and around investing. So in today's video, this will be an attempt to address those questions. For those who asked questions that are outside the scope of investing, please do not worry, I will address those in future videos. And so with that said, let's get into today's video.
The angels bow down at the thought of you. The darkness gives way to the light for you. The price that you pay gives us life brand new. Hosanna forever, we worship you. Hosanna forever, we worship you.
Please note that none of my videos constitute as financial advice. If you are looking for financial advice, please speak with someone who is registered and certified. I'm just a friend having a conversation on personal finances. What is investing? Now, in order to properly understand investing, we first need to discuss its close cousin, saving, in order to understand the distinct differences between the two. Okay, now saving is putting aside a portion of your salary or profits from business transactions for a short-term goal. Usually a goal that you wish to obtain within the next year to 5 years. Okay, so a short to medium-term goal. But investing involves purchasing products that will help you to beat inflation. Okay, so another name for that would be capital preservation, or to grow your money above the inflation rate, otherwise known as capital growth. So for example, if you want to buy yourself a Nike Air Force, then you would save towards that goal. If you want to have an emergency fund, then you would save towards that goal, and so forth. So this is setting a portion of your salary or profits from a business transaction. You put that away, usually in a bank, for a short-term goal. So that's saving. Investing involves buying products in order to achieve one of two goals. One, capital preservation. So in other words, retaining the buying power of your money, which is to say that if you can buy 4 items with 1,000 rands today, then you should be able to buy the same number of items, the same 4 items, in 10 years from now. So that is capital preservation, retaining the buying power of your money. The second goal of investing could be for capital growth. In other words, growing the value of your money over and above inflation. This could include achieving goals like planning adequately for retirement, as well as building wealth that is transferable to the next generation. Now, one of the questions that I got on Instagram was, what are other options that one can invest in besides easy equities? This is a very good question. And to answer that, there are essentially 2 investment options. Number 1, you could invest in tangible assets. Number 2, you could invest in intangible or paper assets. Okay, tangible assets. What are they? Okay, so tangible assets include things like property. Okay, so you buy a property, you either keep it for a couple of years and then resell it at a higher price, or you buy a property and you lease it out, aka putting people, renting it out, gaining cash flow from using the property in that way. Okay, so one investment option is buying a physical property. Option number 2 could be buying a car if you intend to use it on the Uber platform, the Bolt platform, essentially using it as an asset that will bring in money. In other words, it will make back the capital that you used to buy the vehicle, and it'll then make you extra income in addition to the capital that you had initially invested in purchasing the product. Okay, so one option could be to buy tangible assets, things that you can touch, things that you are directly involved in. Another example includes either starting or buying a business. Now, it's important to note that there are a few things you need to consider before investing in tangible assets. The first being, number 1, that it is usually expensive to invest in tangible assets. It's very expensive to buy a house, very expensive to buy a car, very expensive to start a business. Number 2, you have to consider the fact that it takes a lot of skill to ensure that that investment brings in a return, aka ROI. Being a landlord, using your vehicle on the Uber or the Bolt platform, or starting a business involves a lot of skill and a lot of time in order to ensure a return on your investment. So if you have the time, the skill, and the opportunity, then you should invest in tangible assets. However, if you do not have these 3 components, the time, the skill, the opportunity, then perhaps the second option might be a better one for you. Intangible or paper assets. Okay, now intangible assets are those assets that you cannot physically touch. And that's why another name for them is paper assets. So they are assets that you have on paper, you can't physically touch. Now, paper assets include things like shares, otherwise known as stocks or equities. They include bonds, they include unit trusts, and they also include ETFs. Now, in the future, I will do videos on each one, or I may do one video where I compare the 4 different types of paper assets. If you do not know or understand what they are, do not worry. In future videos, we will break them down and sort of explain them in a bit more detail. But just to give a broad overview, a share is a portion of a company. So owning a share is like owning one brick of an entire building. So you own a portion of the equity or the worth of a company. So that is a share. An ETF or exchange traded fund is very similar to a unit trust. They are a basket of shares from different companies, and the only difference is that one is actively managed by professionals and another is passively managed. And then lastly, bonds. Bonds are essentially a loan that the government or state-owned enterprises make to investors, and they then pay investors back with an interest after a stipulated period of time. Okay, now the next logical question is, where can you purchase paper assets? Now, the place where you can buy paper assets is called the stock exchange, otherwise known as the stock market. Now, as the name suggests, this is a market where shares and bonds are bought and sold. It's much like going to a food market where you have a variety of different food options that you can buy and that you can sell as a merchant. Now, there are over 60 large stock exchanges across the globe. The biggest stock exchange in the world is the New York Stock Exchange. The biggest stock exchange in Africa is the Johannesburg Stock Exchange. Now, unlike a regular market where you can simply go buy and sell what you need, with the stock exchange, you need a broker. or a middleman through which you can purchase shares, ETFs, unit trusts, and bonds. Now, there are two options to access the stock exchange. The first option is through investment companies such as Coronation, Allen Gray, and so forth. The second option is to DIY your investments through online investment platforms such as Easy Equities, ABSA Stock Brokers, Standard Bank Online Share Trading, the Frank Investment Platform, and so much more. There are two metrics that I think are important to consider when choosing an investment platform. The first is the fees of the platform. The second is the variety of options that it gives you in terms of investing in the local market as well as investing in the offshore market. Offshore is just a fancy way of saying the overseas market. So before choosing an investment platform, ask yourself, does this platform give me the options to invest in the JSE, the Johannesburg Stock Exchange, which is the local market? Does this platform also give me the option to invest in the offshore market? So if I wanted to invest in the New York Stock Exchange, would I be able to do that? If I wanted to invest in the European market, would I be able to do that? Okay, so consideration number one is, does it give me a variety of options in terms of what I can invest in? Number two, the fees. Is this platform relatively cheap when compared to other investment platforms? Personally, I invest using the Easy Equities platform. And if you do want to sign up on that platform, I will leave a link below. Now, when you sign up through my referral link, there will be a little bit of a surprise for you and for me. However, you are free to choose any other investment platform. And even if you choose the Easy Equities platform, you are free to sign up on their website as opposed to using my link. But obviously, if you use my link, it is a benefit for you and it's a benefit for me. So use the link. Okay, now if you've made it this far into the video, thank you so much for being a real one. Just to let me know that you have made it this far into the video, please do me a favor. So behind me, I've got a light, a special light that I got from a friend. It changes color. So let me just quickly show you guys. See, we've got a blue over there. Now it's a green. Now it's a purple. Now it's back to like an orange. Okay, so these are the different colors on the remote. Let me see if I can get it to like focus. There we go. Okay, so if you made it this far into the video, do me a favor. Tell me what color you would like the light to be in the next video. As always, thank you guys so much for being here. I really appreciate you. Thank you so much for the support. Thank you for subscribing. Thank you for liking the videos. And most especially, thank you so much for your comments in the comment section. I really enjoy your messages. So please, if you have anything that you enjoyed about this video, let me know in the comment section. If there's any questions that you had, let me know in the comment section. If there's any future videos that you would like to see on this channel, let me know in the comment section. Till next time, bye. Dawe tu wenze njani